Neil, as you look at some of these price moves, what would you say you're doing substantially different than your peers to justify the kind of premium that's in your stock price?
I think we were off a low base about a year ago. There was definitely some uncertainty into the market as to our ability to take advantage of a transaction that we had done with Sibanye-Stillwater and our ability to raise the necessary capital to actually develop the project. But that came together quite nicely, and then we were included back onto one or two indices, and that really gave support to the stock. So it was solid performance, plus, as I say, off a relatively low base.
Neil, good morning to you. Obviously, you are a gold play without a gold mine, per se, the traditional perspective. You mine, you process the trailings. I'm just wondering, in terms of access to supply, the lifeblood of your company, what is the risk around the access to those trailings? Is there any risk, or is it just an infinite access menace with no political angst associated with it at all?
Look, it's a different kind of risk. There's plenty of tailings around in the Johannesburg landscape, and now also further west towards the Western Deep Levels area, the Driefontein and Kloof area, which are renowned mines. They were very high in gold content when they were mined initially since the Second World War. The risk for us really is more of a logistical risk. It's supply of electricity. It's interference with our infrastructure. But it's going to be around a long time. But we need to manage our throughput very, very carefully, and we also need to make sure that our plants stay in stable state. But it's certainly not devoid of any risk. It's just a different kind of risk which we need to stay ahead of.
I mean, on that note, Neil, how is illegal mining in South Africa affecting the company, and what would you tell some of the top policymakers in government to change?
Well, yeah, lots of people, thousands of people have lost their jobs in the gold mining industry, in fact, the underground mining industry over the last few years. And they've now gone back to what they know, and they've accessed old workings, old underground workings and little outcrops here and there, which they mine. It doesn't really impact on our operations because we have less than a third of a gram of gold in every ton of material that we process. So you've got to carry a lot of that with you in order to extract any meaningful amount of gold. But it's now assumed, I think, organized crime proportions, and it's the sort of thing that's requiring government intervention. And you are seeing more and more of that happening. You know, the unfortunate reality is that I think it's probably linked to some of the other crime syndicates that are involved in illicit trade in tobacco and weapons, et cetera, the ones at the top. So they're well resourced and they're well looked after. It's the ones at the bottom, you know, people staying underground for 2, 3, 4 weeks. They're the exploited ones, and they need assistance and support from government. But it's undoubtedly, it's a big problem in some of the older discarded areas, underground mining areas in South Africa.
Neil, we caught up with Mark Bristow. He has deep mines. He says he's not seduced by the rally in gold and that we're going to form a new base. Gold is retracing, it's just repricing over the past couple of days. How do you see the trajectory for gold price? Will it return to a parabolic rate towards $3,000, or where is the base for you?
Look, you know, when I plan capital on the gold price of the day. And quite frankly, I wouldn't have planned it 2, 3 weeks ago when it was north of $2,000 because I think it was probably pushed there by sentiment. And it's not just sentiment in terms of gold price, it's also sentiment in terms of the rest of the economy and what you can invest at. Whether gold is being sustained at the current levels because of actual demand for gold, I'm not convinced that it is. Certainly, I believe that the long-term dynamics for gold are really, really good. But in the short term, I think one's going to be very cautious. There's a lot of fear and uncertainty in the world, and people reluctantly buy gold. It's not something that you go towards because if it's a pill. It's because you're running out of options. It's because you want to preserve your purchase parity. And there's a lot of that happening in the market at the moment. So I think I spoke to one of your colleagues about a week and a half ago, and I said that if it turns south, then it could probably go down quite a lot. And it seems to be doing that. Of course, in South Africa, because we produce in rand and we sell in dollar, it still stayed north of R1 million per kilo because this is probably on the back of dollar strength. But But I
Sure.
do think that one should be fairly cautious in the short term. The fundamentals, I do believe, though, are supportive of a gold price well north of $2,500 in the longer term.
I mean, Niel, your stock price has surged in excess of 250% in 2020. I'm just looking at the chart here. The biggest gainer on the South Africa FTSE Africa All-Share benchmark. You talked to me a little bit earlier about what sets your business apart. I'm wondering, what do you plan to do to continue justifying that kind of premium? What kind of bigger targets do you have going into 2021 that could help that momentum get supported?
Look, in order for the stock price to improve further, I think you're going to need to see a change in the gold price. The gold price has got to rally. Not everything is off the back of performance, financial and operating performance. Our operating performance has been solid even through COVID because we mostly automated and mechanized. But I think the operating and financial performance has taken the stock as far as it probably should. It's what your sentiment is in terms of gold price going forward, what will determine the movement in our share price, I believe. Look, I'm not a specialist, I'm not an expert, but sort of looking back over the last 10-odd years, it's typically what impacted on the share price. We're very fortunate in the sense that our major shareholder is Sibanye-Stillwater, and they have a vast footprint. And I do believe that we've only scratched the surface in terms of leveraging the opportunities of other assets within their portfolio, which we could access and bring to account. And that would give us fairly significant growth opportunity. I think also because of the ESG nature of our business, the fact that we effectively reverse the impact of mining on... Yes, sir.
Niel, we just want to get one last question in with you. Time is against us. It's a bit like Heathrow. We've got CEOs lining up in the skies above us. Sibanye-Stillwater, they boosted their stake. Are you talking to them about taking more of a stake? Are you talking to any other new core stakeholders? You can say yes or no. It's a rare occasion for a CEO, but yes or no. More to come from Sibanye?
No, we're not. We're just looking at leveraging that position and accessing more assets.